What if Wall Street just unlocked a backstage pass to the XRP show? Would you grab a seat or let someone else claim your spot? Seriously, blink and you'll miss it, because Coinbase just flung open a brand new door that could drag a tidal wave of institutional cash straight into everyone's favorite courtroom seasoned crypto. And I've been glued to the screen ever since. So picture this. Yesterday morning, I'm halfway through my first espresso, scrolling like a kind of zombie, when my phone buzzes with the kind of headline that you only get once in a blue moon. Coinbase, yeah, the publicly listed behemoth your kind of dentist probably uses to dabble in Bitcoin, quietly tweets that their FTC regulated XRP futures contracts are now live. Boom. No flashy confetti, no Las Vegas light show, just a matter of fact post. And suddenly the entire XRP community is sprinting out of their group chats like someone yelled free airdrop. Now I spit my coffee out, slam open the charts, and there it is. A shiny new derivatives pair humming on Coinbase's screen, right? 10,000 XRP per standard contract, 500 XRP for retail sized versions. Now they're handing out, I guess, the keys to two different kind of roller coasters here. One for the hedge fund kind of adrenaline junkies, and one for us kind of regular theme park visitors who still want a thrill without losing our lunch. And of course, if you've ever wondered how a single exchange listing can kick open the floodgates for a coin's new chapter, buckle up, because by the end of this video, you're going to know why that quiet little kind of tweak could spark more than just the short-term green candles, right? How it kind of hints at an entire ecosystem of ETFs, options, and other kind of alphabet kind of soup financial toys, and why we just watched XRP's on-chain activity jump 67% in literally one Sunday afternoon. Oh, and yes, if you want the kind of play-by-play trade setups in real time, well, join our free crypto Discord. The link is tucked in the description down below. We don't bite, we just chat. So here's how my morning unfolded. As soon as I saw CFTC regulated and next to XRP, my first thought was, wait, who bribed the alphabet agencies? Kidding, of course, but honestly, right, this combo really matters, right? The Commodity Futures Trading Commission isn't some kind of rinky-dink batch. They're the folks who stamp serious derivatives with big government seals of approval. Now, for context, 𝗕𝗏𝗏𝗧 may have fired the first shot by listing a US-based XRP futures contract last month. But 𝗕𝗏𝗏𝗧 is still a kind of small boutique bakery compared to Coinbase's Costco. And institutions, well, they love Costco. Now they want giant pallet-sized pallets of risk, right? That come with paperwork that is thicker than your winter comforter, right? Coinbase, it offers just that. So when Coinbase says, yep, we're offering 10K sized XRP futures under CFTC oversight, well, Wall Street, they finally have a kind of sandbox big enough for their bulldozers. And that's where an XRP community legend named 𝗕𝗓𝗪𝗪𝗔𝗥𝗘 jumps into the Twitter trenches. Now, he threads a mini essay faster than I can butter toast, explaining why this is more than just another ticker on another exchange. Point 1. Institutional presence, baby. Now, market makers, hedge funds, even bored pension managers now have a streamlined pipeline to XRP exposure without touching the spot market directly. It's kind of like giving them a remote control car that still lets them race but without getting the mud on their shoes. Now, point 2, liquidity, right? Futures siphon in volume because traders crave leverage like coffee addicts crave caffeine. More volume means tighter spreads, lower slippage, and sweet, sweet volatility that day traders fantasize about. Point 3, and this is a juicy one. Regulated futures often act as the dress rehearsal for spot ETFs. If you want history receipts, just look at how Bitcoin's CFTC greenlit futures at the CME in 2017 and how it warmed Wall Street's cold feet before the floodgates of ETF filings were seen. Now, let's zoom out for just a second. Price action always hogs the spotlight, but behind the curtains, there's on-chain data quietly humming a completely different tune. Now, over the weekend, XRP's ledger active kind of addresses, it spiked from 27,000 to a kind of hair over 40,000, a jump of 67.5% in 24 hours. This is kind of like your kind of local gym suddenly doubling its membership overnight after hiring a TikTok famous trainer. Now, more wallets moving means more people aren't just kind of doom scrolling. They're actually transferring, swapping, maybe even gearing up to punt on those new futures contracts. And yet, every kind of crypto soap opera loves to remind us, right? Price rarely sings in perfect harmony with fundamentals. Now, XRP popped early in the day, right? Flirted with euphoria, then did a kind of classic retrace to hover around the $2.07 in that morning, right? It's a classic kind of crypto case, right? The heartbeat monitor of a hummingbird, essentially. But let's talk about the elephant in the room. XRP's relationship with US regulators has been, well, 10 seasons of The Office. Funny if you're kind of watching from afar, stressful if you're Jim trapped at the desk. Now, even after kind of partial court wins against the SEC, the label security or not a security still kind of hangs over every conversation like a badly tuned, ukulele. So here's the kind of challenge, right? Institutional investors have been kind of tiptoeing around XRP since, or at least like it's kind of a slice of ghost pepper pizza, right? Now they want the flavor, but they fear the burn. Now a CFTC regulated futures market on Coinbase is basically the waiter showing up with, a chef's note. Relax, the pepper's been de-seeded, right? Your taste buds are safe. And that kind of regulatory comfort blanket could nudge, fence sitters essentially to finally dip their toes or, entire feet into the XRP waters. Of course, right? We can't just cheerlead without asking the big what ifs, right? Future trading is leverage territory. Leverage amplifies gains the way that hot sauce would amplify tacos, but it can of course torch your tongue or portfolio if you overdo it. Now, if speculative leverage balloons too quickly, well, we risk cascading liquidations, flash crashes, and the usual kind of merry-go-round of Twitter blame games, right? Think back to May of 2021 when a single Elon tweet sent billions of leveraged longs to liquidation purgatory. Futures are powerful tools, not toddler toys. So how can all of this expansion actually translate into real-world price growth instead of another hype cycle? Well, let's break down the kind of domino effect here. Basically, it's because of a kind of Rube Goldberg kind of machine designed by bankers, right? Step 1, Coinbase Futures increases liquidity and trading data. Step 2, that data becomes the raw material for Wall Street quants building, volatility models, correlations, and hedging strategies. Then you have step 3, right? Asset managers kind of point to those models and say, see, we can, quantify risk. Look at this pretty graph. Then you have step 4. ETF issuers run to the SEC. Ironically, yes, the same SEC still kind of side-eyeing XRP with, fresh filings, arguing the market is mature enough. And then you have step 5. Boom. Spot and leveraged ETFs launch. Retail investors can now toss XRP into retirement accounts without messing with private keys. And boomers brag at barbecues about their Ripple exposure. Now, step 6, of course, is the demand spike presses on limited supply like a thumb on a garden hose. you know the rest, price fireworks. And if that sounds too abstract, imagine a small town suddenly getting its first airport. Week 1, a couple of regional flights. Week 3, tourists discover the local beach in Instagram kind of gold sense. Week 6, hotel chains kind of break ground, restaurants hire extra staff, the local economy pumps. Coinbase's futures kind of runway here is the airport, right? ETFs are the incoming tourists. Liquidity is the money that those tourists drop at the surf shop. Now, let's ride this wave into the climax then, right? The part where every conversation turns from interesting to, wait, what just happened? Look, right, at the timing here. Over the past quarter, XRP already snagged the world's first leveraged ETF on the Hong Kong Stock Exchange, and US spot filings are piling up on the SEC's desk, faster than Black Friday's returns. Right, slap on Coinbase's derivative desk now streaming real-time XRP futures data straight into Bloomberg terminals, and suddenly we've built the exact infrastructure that analysts said was missing 6 months ago. Right, the dominoes at the kind of end of the line, essentially, the last kind of click before the pieces all collapse into a neat corporate sponsorship for, yes, you guessed, an XRP ETF announcement. Now, I'm not saying it drops tomorrow morning, but if you see the breaking kind of news, SEC green lights, spot XRP ETFs in your kind of push notifications later this year, don't act surprised. We literally are watching them lay the bricks as we speak. And here's the part that blew my mind the most. The retail-focused contract size, 500 XRP. At $2 a pop, approximately, we have had a bit of a push at least to the upside at the point of recording, it's about kind of $2,000 of kind of notional value, right? Now, suddenly, your average crypto enthusiast who might not fork over 10 grand for a standard lot, can still kind of play the futures game responsibly. It's kind of like Coinbase built a kind of second door and slapped on a come as you are kind of banner. That kind of healthy participation from both whales and shrimps kind of keeps the market honest because it mixes motive here, right? Whales bring depth, shrimps bring diversity. And together they kind of stop price from being, a lonely kind of swing set on a very windy day. But let me sprinkle a little bit of caution, right? Because heroes in Greek myths always had a kind of fatal flaw. Right? Liquidity can, of course, be a double-edged sword if the market senses blood, right? A kind of dolge of bearish kind of futures could theoretically suppress spot prices if open interest skews too negatively. Now, think of it as kind of like a seesaw, right? More kind of shorts than longs, the seat tilts, and gravity wins. That's kind of why monitoring funding rates become quite crucial here. Remember, in our Discord, we chat and chart those rates, quite often. Subtle kind of plug here and there, but why don't you join us? The link is in the description down below. So, what about the core technology? Futures and ETFs are pretty cool, but if the underlying chain isn't busy, you're basically building a Ferrari with a kind of skateboard engine. And here's where that kind of 67.5% jump in active addresses becomes gold dust. Right? 40,000 wallets buzzing in 24 hours means developers, traders, maybe even NFT design projects are hitting the ledger with new transactions. More usage equals more fees burned, equals greater utility narrative. Right? Utility, of course, is the anchor that keeps speculative balloons from drifting off too far and into kind of tulip mania territory. And of course, while we're anchoring things down, let's revisit price one more time, right? $2 and some change might feel, a little bit anticlimactic after a kind of news bomb of this size. But think about markets as kind of teenagers, right? They pretend that they didn't hear you. They process in secret, then react suddenly at 3 a.m., right? Add a derivatives kind of hedging, weekend volume gaps and macro jitters, and where you can say hello, rate cut rumors, anyone? And of course, all of that initial kind of pop then makes a lot more sense, right? Long term, though, if future volumes, do in fact scale and ETF whispers solidify, well, we will be looking, back at kind of $2 something XRP, like people looked at $100 Bitcoin, cute and nostalgic. And so, where does this leave us then? Well, we've got a kind of reputable US exchange offering regulated futures. We've got on-chain activity surging. We've got analysts pointing to a clear pathway towards ETFs. And we've got a kind of community still hungry, even after a decade-long, legal drama. From my vantage point here, it's kind of the most solid trifecta that I've ever seen since coffee, Wi-Fi, and noise-canceling headphones become my kind of workday holy trinity. All right then. So let's go ahead and land this plane, right? Coinbase's new product isn't just another ticker adding noise to your watch list, right? It's the kind of scaffolding for XRP's next growth spurt. Maybe not going to happen overnight, or might not be an overnight moon mission, right? But it will be slow and methodical. And that climb, well, that's what institutions love. And retail, it tends to kind of underestimate. Futures bring liquidity. Liquidity attracts serious money. Serious money builds complex projects, or products, I should say. And complex products, well, it pulls in waves of new participants. We're watching the snowball at the top of the hill. Small, contained, but packed with potential kinetic energy. Whether you're trading, holding, or just kind of rubbernecking, right? Keep one eye on those funding rates, another on active addresses, and maybe a third imaginary eye on the SEC's docket for the word XRP and ETF approval in the same paragraph. And if you want company on that three-eyed watch, hop into our free crypto Discord via the link that is in the description down below. We share charts, we drop news, and the occasional meme when the market gets too tense. There's no paywall, just pure passion. Join us, link in the description.